What's up, everybody? This is Suleiman from SAZ. This is the channel where we talk about the money in business and the business of money. Today, we'll be talking about savings. So stay tuned till the end. So what is saving? Well, in simple terms, saving is taking any kind of asset, putting it aside so that you can use it in the future. Now, when we were young, our parents either gave us candy or cash, right? But they started instilling this culture of saving, whereby maybe they will give you cash for a full week, a stipend, and they will expect you to manage it and use it. And some of us, we will save a little bit for things that we would like, right? When I was young, I used to save coins, and when it was my birthday, I would buy myself the gift that I wanted. So, how much should you be saving? Well, this question is very relative, depending on who you are, where you are, like a town or a city, the work that you do, and any other income streams that you have. If you would like to know how much you need to save, then you can watch this video here where we cover the different budgeting frameworks, and we'll also link it at the end of the video as well. What are the different types of savings? Well, there are no predefined categories for savings, but here at SAZ, when we are consulting either businesses or individuals, we usually group them into these four main categories. The first one is the runway saving. The second one is the emergency saving. The third one is the goal saving, and lastly, we have the long-term saving. Let's start with the runway saving. Now, other people call it the rainy day fund or even the subsistence saving. What it actually means is that you save a portion of your income to cover your monthly expenses for a certain time. At SAZ, we usually recommend you saving up to 6 months worth of your expenses. Let me give you an example. So if you calculate your monthly expenses and you find them to be about 10,000, what you'll do is take that 10,000, multiply it by 6 months, meaning you'll get 60,000, and that is the amount you need to have as your runway. Yeah? So this runway actually helps you when things don't actually go your way. For example, you lose your job or your business is slowing down, you're not making enough sales, then you are sure that you can live within your means for about 6 months. Other people, we might recommend them having between 6 months to about a year. This is dependent on what they actually do and if it's risky. The second type of saving is the emergency saving. Now, this entails you taking a portion of your total income and saving it aside just for emergencies. Imagine, and God forbid, you are in an accident and you need urgent medical care. So this is where you'll go and take the money to get that medical care. And the emergencies are the way you will define them. I also define funerals as emergencies. So once I hear somebody has passed on, then I will take from my emergency fund to go and help out. It's up to you to decide how much do you think can cover your emergencies. But it's important to note that if you are a regular contributor to the NSSF or NHIF or even another insurance service provider, then you don't have to have a big emergency fund because majority of your healthcare will be covered by them. The third type of saving is the goal-based saving. Well, in this goal-based saving, it means that you're saving money for something that you already know and you already know how much it costs. So you take this money, you put it aside until it reaches that threshold, and then you take it out and you do that specific goal. So for example, you can be saving money so that you can go back to school. You can be saving money so that you can have that wedding that you wanted, or you can even be saving money so that you can start your own business, for example. The last one is the long-term saving. And this long-term saving is where you have already developed a habit of regularly saving money. Either you have a history of saving, or you are planning to save until you reach your retirement age. So the purpose of long-term saving is actually you securing your retirement and building your retirement fund. Question of the day: do you know anybody who got rich just from saving money? Let us know in the comment section below. Well, I'm asking this question because I've never heard of anybody who got rich just from saving. Because saving in itself is just a stepping stone for you to become rich, but doesn't guarantee you becoming rich. And here's why. The first thing is that when you decide to save your money and you put it aside, your money is subjected to inflation. Now, inflation occurs because the currency loses its value. And this happens on a daily basis, but our government tells us this figure at the end of the financial year. So, for example, in Kenya, between the year 2015 to 2020, each year the currency was losing an average of 6% per year. So that means that if you had 100 shillings in 2015, then in 2016 you actually needed 106 shillings just to do the same thing. So let me show you some few things here, right? So there's that. You can always pause the video and look at them carefully. The second thing I would like to show you is this, if you are Tanzanian. The third thing I would like to show you pour mes amis congolais. And the last thing for my friends in Burundi. Same thing. And if you remember while you were young, depending on which country you are and the currency that you use, the smaller denomination currencies used to do so much than what they do today. And that is because of inflation. So when you save your money, and let's say you start saving today and you want to use that money in 2030, it means that if you saved $1 million today, it won't do what $1 million can do today in 2030. The second negative consequence of saving is actually not generating income. When you take the same example with 1 million and decide to put it in savings, it's not generating you any additional income. And that's a problem, because at the end of the day, we all want to grow. And lastly, there's something we call the opportunity cost. Now, we measure this opportunity cost even though it's an intangible cost. So I'll give you an example. So we have the 1 million on one side, and here we have a business venture that could generate up to 10% of revenues. So if we take the 1 million and put it in this venture, we are more or less going to get 10% from that 1 million, which is 100,000. So the opportunity cost in this instant for saving that 1 million is that you have foregone that opportunity of gaining 100,000. So where and how do you save your money? Well, the first option is you keeping your own money and hiding it somewhere and saving it for a particular period, right? However, if you do it that way, whereby you're putting it under your mattress or you have a small piggy bank somewhere, your money is still subject to inflation, it's not generating you any income, and you still have these opportunity costs, whereby there are opportunities whereby you can use that money to generate you some income. The second option is giving it to a third party. And when I say third party, it can be financial institutions. Majority of them actually pay you interest if you decide to save with them. At the time of this recording in Kenya, the highest interest rate that you can get is around 7% from these commercial banks as well as cooperative societies. So if you give them 100,000 today, 1 year later, they will give you back 107,000, meaning that the 7,000 is the 7% you earned for saving your money with them for a full year. You can also decide to save your money with M-Shwari. For those who are in Kenya, you understand what M-Shwari is. And M-Shwari actually also pays you an interest if you save money with them. And the advantage to M-Shwari is that they pay you quarterly. as opposed to annually. If you want to know how much you should be saving, then watch this video. And if you're already saving and you have a small amount that you want to invest, then watch this one. If you found this video helpful, don't forget to give us a like and subscribe if you haven't already. Share this video with at least one person so that we can share the knowledge. And until the next time, build your future today.